What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So, as speculated in the last video on the Economy channel, we did end up creating that lower low right after that all-time high, with the purpose of washing out all the longs that piled up as a result of this breakout. Bitcoin loves creating patterns like this, so this isn't anything unusual. Longs aren't the only liquidity the market makers are after, however, and they pulled off a double whammy by creating a short squeeze right where the shorts were most complacent due to their lower low and liquidity zone that was waiting to be taken out. Understandably, this can create some confusion. Why didn't the market makers use this opportunity to fully tap into this liquidity zone? This was also a question raised in our Telegram group. Well, there are multiple possible answers to this. The first option is that we will tap into it, just with a slight delay now that we washed out the most highly leveraged shorts. Costa from Minotaur offers another explanation. He points out that the Powell speech was interpreted as bullish and interrupted the market maker's movement. This is why you need a confluence of signals when making decisions. I would also add that sometimes the liquidity zones end up acting as strong support instead of something that is guaranteed to be fully taken out, at least initially. It also makes things more unpredictable, and pumping from this level is what market makers deem to be the best play for now. Before continuing with my thoughts, let's look at some other charts and indicators. Let's start with the DXY. So this relief rally over here was based on the previous assumption that rate cuts would be pushed back due to strong labor market conditions. However, Powell has now indicated a greater willingness to cut interest rates, despite tariff inflation pressures. Powell cited the risks of a weakening jobs market and slowing overall growth. Futures markets put an 89% chance of a quarter point cut in September. So what does this mean? In my opinion, only one thing. The dead cat bounce in the dollar was based on a lie, and there's nothing to prop it up anymore. Therefore, I do very much think this downtrend in the dollar will resume, and our bear market target zone will be hit by the end of the year, which should be very good news for high-risk assets and Bitcoin. Now, let's look at the unemployment rate. So interestingly, this isn't still too bad over here. It's still at around 4.2 or so, but that's toward the high end of this range that we have been building here. If we start getting closer to 5%, then things would look very worrying. Right now, we just have to keep an eye on this. Maybe the Fed knows more than we do right now about some underlying weaknesses in the economy. This brings us to the federal funds rate, which we also talked about before. And what is worrying over here is that people are actually anticipating for more rate cuts than before. People previously thought that we're only going to have one rate cut. Now it could be two or more. So even though the likelihood of having a recession this year is very low, people are actually anticipating like a 12% chance of having one. It could happen next year. So we just have to look out for that. Hopefully it won't happen, but if it does, then 2026 would be the most likely year for that during like an aggressive rate cut cycle. And here's the paradox. The rate cutting itself could actually be very bullish for stocks and other high-risk assets at first, but that would only be the blow off top of the market cycle because there will be some serious underlying weakness already in the economy. Now let's look at some news. For our first piece of news, we have Bernstein's prediction of a super extended cycle lasting all the way to 2027. This is a great example of the this time is different narratives that usually pop up toward the ends of bull runs. However, instead of putting it down, let's try to give it the benefit of the doubt and extract all of the useful information we can from it. The price has hit some of their earlier bullish targets, like going above $80,000 by the end of 2024. Also, they agree with our target of 200,000, which they say can happen within 6 to 12 months. As the article states, if history repeats itself, the current bull market that began in 2023 would peak late this year or early next year, in line with the crypto sector's typical 4-year cycle. This is where things get fishy, however. Now we believe the Trump administration is in mission-critical modes to build the US into the crypto capital of the world, so the market peak is not anywhere near, the analysts wrote, pointing to recent regulatory support from Washington. I highly doubt that Bitcoin could maintain such a lengthy bull market because Bitcoin likes periodically retesting the bottom power law support. Also, we are already getting so much FOMO from institutional investors, so we're bound to run out of liquidity sooner or later, resulting in a correction. The only question now is what will be interpreted as an extended bull market versus two normal 4-year cycles. We know that the intensity of bear markets has been decreasing over time, with the last one failing to even reach an 80% drawdown. So I wouldn't be surprised at all if we only had a 70% correction or so next time. This would become even more likely if we don't reach our upper end target of 200k or so, because Bitcoin would have less room to fall to retest its bottom power law support. While I do think Trump's administration will continue to positively accelerate Bitcoin's growth, a 1-year bear market is still something we're going to look out for, unless the charts tell us otherwise. Now, let's indulge in some fun schadenfreude for our next and last piece of news. Maybe some of you guys remember this infamous prediction from 2018 by Harvard economist Kenneth Rogoff, stating that Bitcoin was more likely to hit $100 than $100,000 in 10 years. This was when Bitcoin was still struggling in that post-2017 bear market, when it dumped all the way down to 3K. Writing on X, Rogoff acknowledged that he underestimated the OG cryptocurrency's resilience, citing sensible regulation never arriving, its role in the global underground economy, and people in authority themselves holding crypto, despite conflicts of interest. Sounds like a lot of cope to me, guys. He initially claimed in 2018 that the asset's actual uses as a transaction vehicle were negligible outside of money laundering and tax evasion. He also insisted that regulation would eventually crush the cryptocurrency's value. At the time, BTC was trading around 11,200 and was still reeling after dumping from its 2017 peak near 19,000. The funny thing is that overregulation was indeed killing Bitcoin and crypto in general for a while, but this was just a phase in Bitcoin's overall journey, a low point in its dramatic arc. He didn't account for the power of Bitcoin's network effect, and we didn't even need 10 years to reach 100,000, only 6. People from various fields are now having a field day, so I'm going to be quoting a lot of this. Analyst BitPain compared this mistake to a marine biologist mistaking a blue whale for weighing 200 pounds. Bitcoin proponent Robert Breedlove also came in hot, dismissing the professor outright, saying he never cared for his opinion then and still doesn't now. However, others like Columbia lecturer Omid Malakhan argued Rogoff's misstep was a reflection of the wider innovator's dilemma in academia, where reputational risk, institutional bias, and the lack of technical background may leave many economists unsuited to understand the importance of Bitcoin. Austin Campbell, a former JP Morgan executive, went further in a thread the same day, calling Rogoff the single worst situated person in the entire world to understand the value of Bitcoin, citing his privileged access to stable institutions and a dollar-based system. Meanwhile, economist Jan Wistenfeld highlighted that Bitcoin's appeal stems not from tax evasion as Rogoff had insinuated, but from systemic inflation, monetary expansion, and rising global debt loads. These are all true, yes, but so is the strength of Bitcoin's power law and network effect. All this proves is that having a degree from Harvard doesn't make you smart, and even the smartest people can be incredibly dumb when talking about subjects they don't understand. A perfect example of this is when scientists try to delve into politics. Back to the charts, starting with the M2 money shift. So things are looking pretty disappointing here. Bitcoin is still falling behind, while the M2 money supply is already much higher at this point when accounting for the 80 or so day lag. But hopefully Bitcoin will catch up at some point. Maybe this divergence will decrease over time. Right now, the money supply hasn't really dumped all that much, so there is hope that it could still continue pumping here. When comparing the S&P to Bitcoin, then we can see that the S&P could actually be giving us a little bit of a leading indicator here, because it's actually trying to pump to new highs as we speak, while Bitcoin is still correcting over here. So let's hope Bitcoin can catch up as well. When looking at the Fear and Greed Index, we can see that we're still at very neutral levels here, especially for the mania phase of the bull market, which we're officially in. So There's no indication right now that we're actually topping out or anything. Usually we reach much higher levels, like 90 or so, and sometimes even stay there for very extended periods of time. So there isn't anything showing that we have peaked out already. Google Trends is actually showing us something very interesting over here. We went above even 75 here during this recent peak, which is pretty crazy. That's very close to the actual peaks of bull markets, but not quite. As you can see, we typically go to like 90 or 100. And the good thing is that we're now resetting this aggressively, which will give us some more room to go back to the upside later on. So we just have to speculate on where the top will be. Will it be at like 90 or 100, or will it create some sort of lower high like in 2021 over here? Next, let's talk about Bitcoin dominance. And you guys know here that we've been talking about the possibility of Bitcoin dumping against the altcoins for quite a while here, for many months actually. And this is exactly what Bitcoin has been doing. It has been losing some previous support levels here and creating lower lows. And this will probably continue for a little while longer over here as altcoins gain back some ground here. Next, let's talk about ETH BTC. So my ETH trade over here has been doing really well, guys. I bought during the lows of this dip over here, and the BTC valuation of my Ethereum has been growing consistently over the past month or so. This is really good news. I can buy back some more Bitcoin later on. And I still buy a lot of Bitcoin as well. It's just that the Bitcoin positions have been growing much slower. But this is of course only a temporary thing. As you guys know, our target is at around 0.049 or so. This is this previous support area, which would probably act as very strong resistance this time around. But who knows? Anyway, that's where I will dump all of my ETH positions. The momentum is very strong right now because ETH actually just created a new all-time high after, I don't know, 3 years or so. It's pretty crazy, right? So ETH has a lot of catching up to do. It will probably reach around $10,000 or so by the end of this cycle. Now, back to Bitcoin. And let's look at the moving averages. As you can see, we found resistance on the 20-day and 50-day moving averages and support on the 100-day moving average. This is pretty much what we predicted as well, that the 100-day moving average would act as pretty strong support. The question now is what will happen next? Because if we start dropping below this moving average, then the only real support would be that psychological 110k area, which acted as strong resistance before. Otherwise, if we're going to use another moving average as support, then that will be at around 100k or so at the 200-day moving average. But that will probably not happen. When looking at the weekly moving averages, then we can see that the 20-week moving average is at around 106.6k right now, which would also act as very strong support. So if it were to drop below 110k, that would also be a place to potentially wick off of. Maybe we could even close a weekly candle above 110k. That would be the most ideal scenario. When looking at the weekly chart, then this really just looks like sideways consolidation, almost like a bull flag. So as long as we stay above 110k on a macro scale, there's nothing really to worry about. Bitcoin is just moving higher. It just needs to catch up a little bit over here. So the question now is whether we will fill that liquidity gap over there or not. Who knows? I mean, it's only a matter of a few $1,000s here or there. That's not really a trade. I don't care about that. The real question is whether we will actually get closer to 200k, and that's something that I've been asked a lot as well lately. Do I still think that 200k is possible? Yes, it's entirely possible, but as you guys know, my own target actually for selling has been at around 170k or so, exactly for this reason, because we don't know whether we will actually reach that top or not. And it's a good idea to exit a little bit before the actual top, because it's much worse to actually just hold throughout the bear market and watch all of your profits vanish. So instead of asking whether we will reach 200,000, the better question to ask is where we will be in October or November or so. If we're still hovering at these levels here, then obviously not. We're not going to reach those levels. But as long as we are closer to 200,000 than 100,000 by then, I would consider that a win, because that would still allow us to exit at reasonable levels and buy back much lower. And that's exactly what we're aiming to do. Make sure to subscribe to this channel if you haven't already, so you can always stay up to date with my thoughts. This is Saverio speaking, and as always, thanks for watching.